Hello, everybody, and welcome to the fourth in a series of monthly webinars about dental financial issues. I've got gathered around me tonight an excellent panel of experts. Now, as always happens with these things, we're waiting for the numbers to rise before we sort of start talking about interesting things based on your questions. So just occupying a few moments of time whilst the others arrive, I thought you'd be very interested in a contribution made to me by one of our panel, Malcolm Swan from Lloyds Bank, who is a Star Wars fan, and some of you out there might be Star Wars fans. This is our fourth episode, and he pointed out to me that in Star Wars, episode 4 is A New Hope. So I think that's a marvelous way to start this off. But I thought I'm going to continue with this theme because I stopped there. So I had a look at the. I'm not really into Star Wars, but I had a look at the cast, at the various roles, and I thought, well, clearly on our panel, I must be Han Solo. And who else have we got? Well, of course, those of you who may well be ahead of me, you Star Wars fans, but we have our own Princess Leia, with a conveniently named Maja. So we have Maja Thompson from MediHoldings, part of the Henry Schein Group. We're also lucky enough to have our very own Luke Skywalker, my boy Nigel Suggett, dentist, mixed practices, and he'll be helping us out with sort of a view from the I was going to say the common man, but you know what I mean, from the dental perspective, the practitioner's perspective. So he's our Luke Skywalker. We've got UNW tax partner, Charles Linaker, the sage voice of reason. Well, clearly, that's our Obi-Wan Kenobi. So we're doing quite well so far. And at this stage, I thought I'd better give up because amongst the other panelists, we have 2 shiny-headed robots and Darth Vader, the Lord of Darkness. And I don't want to be responsible for allocating those roles. Anyway, now that we've got a bit of critical mass, can I encourage you, the members of the audience, to use the Q&A box to submit questions. I'll be acting as a host. I'll be picking out those questions and asking our panelists to do their best to answer them. We've had a few things that have been sent in advance, so I'm going to start with that until we get the Q&As rolling by coming to Maja. And Maja's experience is not just with, most of you will have heard of MediEstate, part of MediHoldings, but it's a multi-dimensional organization, even greater now, it's part of Henry Schein. But Maja's experience before that was with Portman, the large, mainly private corporate. So there's an added string to the bow. So Maja, I think that buying practices, I know from talking to clients and other professionals, that the whole of the dental practice market can be confusing. So hopefully you'll be able to help us with that. So as far as you're concerned, what's driving the interest in practice purchases? And what about the valuations that are currently being led? Give us a bit of an overview to that, please, Maja.
Yeah, sure. Okay. So I suppose, in short, what's driving the interest and the values in the practices at the moment, I think, could be summarized in a couple of key themes. One of those would be the availability of buyers. So there's a lot of interest in from buyers of all types. So I can then go into those. But the second one is, I suppose, the availability of funding to buy those practices, especially in times when, really interestingly, this week I was just talking about the fact that we are meeting with some of the banks that we work with, and while the bottom has fallen out of the market in a lot of sectors, so in retail and hospitality, healthcare is actually still seen as quite a safe place. So funding is available, which is the key driver in the ability to be able to buy the practices. So I suppose, and if I go back to the buyers, we have over the last few years seen a serious amount of consolidation going on. So, and I suppose that's because we have a number of growing corporates who are interested in, rolling up practices into something that's more efficient to run on a larger scale. And then the second trend that we see a lot of is serious growth in groups. So practices that are between 2 and 5 and heading up to that, I suppose, magical number of 10 or 12 practices, which are then sold on to bigger players. So it's, I suppose, having the availability of all of those buyers in the market that are really driving the interest and driving the valuations.
Okay, that's good. You mentioned funding, so I think it probably would be a good opportunity to bring in Malcolm Swan, Senior Healthcare Banking Consultant with Lloyds Bank. What's your thoughts on bank funding at the moment? Give us some help with that, Malcolm.
Yeah, sure. Well, it's the last time I mentioned Star Wars to you. That's one thing. I didn't know it would be R2-D2, but never mind. Yeah, Maja's nailed it on the head. As a bank, we've always supported the dental sector for many years, had policy reviews since COVID hit. We still see it, as we've always done, as a positive, safe sector in which we want to lend and grow our share of lending. The deals in flight prior to COVID have in the main resurrected, and we're agreeing new ones. So yeah, very much funding is there. Yeah.
Okay, and now again, perhaps putting you on the spot here, but I was at a virtual meeting this morning, and there was some talk about the attitude of different lenders, and I understand that some lenders have tightened up their dental lending criteria. They're still in the market, but they've tightened things up. How are things with Lloyds with your stance on
that? No change at all, Alan. If anything, we're probably busier now, and that might be connected with the other banks not being as hungry, and we're as keen as ever. So certainly no tightening, nothing that's changed anywhere negatively following a policy review.
Thanks for that, Malcolm. If I can move now over to Andy McDougall from Spot On. Andy is a business coach, helps work with practices to improve their profits. And I'd be very interested from your perspective, Andy, on how you see things happening right up to the moment now. We've sort of seen practices that were closed down. Some of them then had a burst of activity, which we referred to in last month's webinar. How are things sitting now?
Well, very much the same. I mean, we have a sample of about 150, so it's possibly representative of the market because we've got all different shapes and sizes and mixes of income, but certainly from the clients that we are working heavily on, on the financials with, we're seeing that in July they were all saying that pent up demand, lots of new patients coming through the door, but the bubble would burst, and they've said that every month up to October. I think the slight difference that we were starting to hear last week was that particularly in the Northeast and the Northwest, we were getting, of course, they were in lockdown earlier in some places than the national lockdown. And they were starting to say that they were seeing an increase in the number of people phoning up to say they were in self-isolation and therefore they were going to have to cancel their appointments. But interestingly, the vast majority of them said the demand is so big that they were able to fill those gaps quite easily. I think the type of things that were going on, as I said last week, last month, Alan, some of our models where we look at where we're going to be by the end of the year. So for people who've got a March year end, we're currently doing a 7+5 forecast. So 7 months actual, 5 months. And that keeps rolling every month, every time we get another month's results. And the picture's not changing. Most of them are going to have a higher profit year than in the year to March 20. And the driving reason, see the same pattern occurring all the time. And the driving reason for that is that obviously in lockdown, we've lost some revenue, but we've also saved lots of variable costs on labs, materials, associate pay. We've had help with furlough. We've had some government grants coming in. In some cases, there's been some holiday periods for some of the expenses, but the same pattern all the time. And of course, when you're doing a forecast, you're saying, well, it depends whether the rest of the year comes in on target. That's coming in off fairly pessimistic rest of year sales forecasts. The other things happening at the moment are people very tired. and saying they're finding it exhausting. They're looking forward to Christmas. People that had put associates on emergency pay rates, quite a lot of businesses did that. The associates are now saying, well, that period of time's passed. Can we now revisit whether we're going to get paid on a different basis? Quite a lot of clients now being paid out on business interruption insurance, and people now starting to think the people who were the early takers of the Bibbles and the Sybil's loans now starting to think about we're coming to the period where some of that might have to start being repaid. So typically that's what we're seeing in the marketplace at the moment. Okay,
that's great. Thanks, Andy. Well, we've had a question that's come in from the floor, so to speak, from Mark Overend. So thanks for that, Mark. And this is beautifully teed up for the topic that Charles and I have been talking about for the last few days. And there seems to be a lot of publicity about this. It's been in the normal press. I think there was an article in I think it was the Times, but also I know Maja's organisation have been sending out emails in relation to that. What I'm talking about is capital gains tax. The rumours of an increase in the rate of capital gains tax, but that's combined with something that really didn't get a lot of publicity at the time, and that's the reduction in the entrepreneurs relief limit, the 10% tax on gains that it was known as entrepreneurs relief, now known as business asset disposal relief, confusingly, and has had a reduction from £10 million worth of gain. Which actually, I know, Ian, you're saying poor audio. I don't know whether that's sort of common right throughout, but I can hear people okay, apart from possibly Malcolm. But can you hear me okay, everybody?
Yeah.
Yeah. Okay. So, Ian, I think it's possibly your machine that's the problem, but I'll speak up a bit just in case. Yes, so to come back to it was a March 2020 change, a budget where entrepreneurs relief was replaced with business asset disposal relief, but with a huge reduction from 10 million to 1 million pounds. So from a situation of 10 million pounds, I've yet to meet anybody with a practice that was sold for more than 10 million, or even a group of practices. Actually, Gurinder Gill saying that the audio still isn't good from him as well. I'm not sure if we can do anything about that. I'm sorry, Gurinder. Anyway, so the point of this is that from a situation where it affected everybody got 10% gain just about. It's now very common. There are lots of practices that are worth more than £1 million. I'm going to bring you in a moment, Charles, but I did some sort of back of the fag packet numbers, just to give you an idea of what we're talking about here. And so if imagine a situation that a practice is being sold with a £2 million gain. Now, before March 2020, the capital gains tax on that would have been £200,000, broadly speaking, 10% of the £2 million gain. Immediately following that change to the reduction of the entrepreneurs relief, the tax now would be £300,000. So there's an increase from 200 to 300. And if the capital gains tax rate goes up to in line with income tax, it would be £500,000. So that sort of puts this into perspective. Potential increase on a £2 million practice gain from 200 to 500,000. Now, interestingly, if it's possible to involve a spouse in this by splitting the gain with a spouse, in most situations, unless your spouse is a GDC registrant or another dentist, then the only way to achieve that is through incorporation. But if you are able to do that, then intriguingly, with those numbers, the actual tax that would be paid is still 200,000, whether it's irrespective of an increase in the core rate of CGT or not. So that sort of gives you a flavour for it, that there could be hundreds of thousands of pounds more capital gains tax to pay. Charles, over to you, just sort of to give a more of a background to that.
Yeah, thanks, Alan. Well, just following on from what you've said, and again, hopefully you can all hear me. As Alan said, that was a major change made by the Chancellor as recently as 11th of March this year, which, believe it or not, was actually pre-outbreak of COVID-19 and measures. So it was actually a normal budget. So he was already having it in mind that he wanted to make some changes to entrepreneurs relief. And given that that was such a huge reduction from 10 million to 1 million, I would be very surprised if in the next budget, which we're expecting in March of 2021, if the Chancellor were to do anything with that £1 million limit. So although I'm not a betting man, I would be fairly certain that the £1 million limit at which you will get taxed at 10% will stay in place. The big unknown is what the Chancellor might do with CGT rates generally. Now, there's been particular speculation in the last few days because, as some of you may have seen in the press, there was a report by the Office of Tax Simplification, which the Chancellor commissioned in the summer. And this report has made a number of recommendations, and included in that, it has held out the possibility that the Chancellor might like to look at aligning capital gains tax rates with income tax rates. However, the same report does highlight that there are a lot of difficulties about that. And I would honestly be very, very surprised if the Chancellor did anything as radical as that in the March 2021 budget, because there's just too much that would need to be done. For what it's worth, I've said to Alan that I think the easiest thing for the Chancellor to do, if he did want to try and catch a bit more capital gains tax, and it is quite interesting. I looked in the report, and capital gains tax for the last year for which we got figures collected about £8.5 billion in tax, and 85% of that 8.5 billion came from the tax-paying population aged 45 plus. So if you're in the Chancellor's shoes and you're wanting to try and get some tax from somebody, then he's unlikely to get a huge amount of opposition, or sorry, he'll get, should we say, less opposition if he does something with the capital gains tax rate than if he tries to do something with income tax rates. And it seems to me that the most obvious thing for the Chancellor to do is to take the top rate of capital gains tax, which for sales of businesses, and if I focus just on sales of businesses, and also sales of commercial property, the top rate at the moment is still only 20%, as Alan alluded to. But he could very easily, at a stroke, just put it back up to 28%, which is where it is for residential property sales, and where, if you can cast your minds back to the last budget that George Osborne delivered in 2016, Osborne in that budget actually took what was the top rate of CGT of 28% down to 20%, with the exception of residential property sales and something else which needn't detain us. So that just strikes me as an obvious measure for Rishi Sunak to do in the March budget of 2021. I guess the only other question then is, does he say, I'll make that increase with effect from midnight of budget day, and let's assume budget day is the 12th of March or something like that, or does he say, which would be the more usual thing to do, that change will only take effect from the 6th of April 2021, i.e. the start of the new tax year?
Right. That's great. That's very helpful, Charles. But and that brings me neatly into asking lawyer John Grant from Goodman Grant, one of the leading firms of dental lawyers, because we've already come under pressure from clients that are concerned about this, saying we better get out and sell our practices now. But with the lead time that it takes, give us some flavour of, well, Nigel's a practice owner. He wants to sell his practice, but he wants to get it through before next 5th of April. What's the chances of that, John?
I think my lawyer's answer to that is it depends. And probably the key factor, and I'm really interested to hear what Malcolm has to say, bearing in mind something that was said at the meeting earlier today. But really, the The two key factors at the moment are A, how long is it taking a buyer to get their lending in place? Because those procedures are certainly taking longer. And the second is CQC. At the beginning of this year, again, pre-COVID, the length of time that it was taking CQC applications from the time that they were accepted by CQC, which is the important point. So you had to get your DBS check in, that could take a few weeks. You had to complete the application form, which wasn't simpler and certainly isn't getting any simpler. That was sent into the CQC, who then checked it. And if there was anything wrong with it, it would come back. But assuming if they checked it and everything was okay, from that point onwards, it was taking around 22 weeks to process a CQC application. We heard only this morning that there are moves afoot to simplify and speed up the procedure, with a lot more information being required up front, and the possibility of that time being brought down to something like 10 weeks. That, in my view, is going to be the key to how long transactions are going to take. But certainly, as things are at this precise moment in time, CQC applications taking 22 weeks. The only way around that is if you are selling the shares in a limited practice, and if the practice owner or practice manager, whoever is the registered manager, and they are willing to stay in that role post completion, then it would be possible to complete a sale before the change in the CQC registration. But quite frankly, apart from that, if Nigel was to come to me today and say, I want to sell my practice and get it through by the middle of March, I'd say, I'm really not sure that that's going to be even within our considerable capabilities. But as I say, the other aspect which we heard about this morning was in relation to bank lending, where I understand that it is taking longer for those applications, quite not unnaturally, but lack of staff being off, etc., apart from anything else. So I don't know what Malcolm might have to say about that.
Yeah, the challenges that banks have had, I think all banks, is the volume of additional help and support that our clients needed, and that's meant we've had to retask some people to do some of the jobs that, there might have been 10 of 9 months ago, but all of a sudden there was 100,000 of them that needed doing. But most of that's behind us, to be fair.
One for you, Nigel, which is unusual because this has come from Kevin Stewart, who I know is a former banker who's now a consultant advising dentists. But this is perfectly poised for you. The question is, I have a client which is a one-surgery private practice. They had been considering a second surgery installation to support growth pre-COVID. They currently hit all the expected benchmarks for practice size. Does the panel feel that the decision should wait until COVID is over, or is there enough confidence in the market going forward to begin this process now? This is a loaded question because I think I know what you're going to say, but would you like to share that with us?
Yeah, slightly loaded in that I have just built an extra surgery at my practice. We were given additional UDAs in year starting this year, which was part of the reason behind building the extra surgery. But I've also moved to become fully private at the practice where we built the surgery. I'll quickly say while we're on the floor, and thank you to Malcolm for helping with the funding behind it. And even though it was kind of midway through the pandemic and the initial lockdown, all went through really smoothly, and I can personally vouch that Lloyds did a great job with organising that for us. But from my point of view, now is a really good time because the building work was a lot easier with the practice with fewer people in. We're not actually using our waiting room at the moment, and involved the moving of a waiting room because my surgery went into that waiting room. And so that was allowed to happen with a lot. There was a lot smoother transition, put it that way, because the builders were able to sort of have a bit of a free run within the practice. So I personally think it's a great time. But that's just me, and I'm not a financial professional or a lawyer or anyone else on the panel.
But he has a dad who is, so that's okay. Thanks, Nigel. Maja, if we maybe come back to you now with there was quite a sort of a controversial thing that came up a few days ago. Apparently, there is a firm of accountants that have a sales agency brokerage, dental sales agency brokerage, that have been putting out the message that as far as they're concerned, that all dental deals during COVID should be done at least 40% discount against the pre-COVID levels. What do you think of that, Maja?
It's really interesting. I was just going to, I'll come back to something that Nigel said, but I'll answer your question first and perhaps add to that. I mean, it sounds like quite an arbitrary figure to say 40% when really, if you look across the country, practices are valued differently in different parts of the country. Different parts of the country have had different exposure to the virus, that they've been in different tiers, lockdown tiers. You could look across the kind of Northern Ireland, Scotland, Wales, England, different parts of the country. So it sounds like a very, arbitrary figure. And I suppose what drives the values of practices is really the supply and demand. And ultimately, it's the market that makes up its mind whether something is overvalued or not. And if it's overvalued, it doesn't sell. So, in reality, at the moment, and interestingly, if I look back at the period of that first lockdown, what happened is majority of the practices that were in that sales process actually stayed in the sales process. Some of them dropped, and I would probably say out of all of the ones that we had that were selling at the time, maybe 5 to 10% dropped out completely. But what happened to the rest is that they were delayed. So nobody wanted to buy a practice while it was closed, which is fair enough. And then the ones that actually were then delayed either by the banks, saying actually, you need to return to a certain level of turnover before we would fund the purchase. So it took some time, but at no point did the practices stop coming to market, because at each point, some of the ones that were in the pipeline and that were ready to be bought, it just never stopped. And we kind of thought, actually, the interest in selling, and I think people are now selling. Maybe there is still a supply of people who are selling for the kind of reasons that it's the right time. It's the exit planning, pension, and all of that. But there's also a certain number of people who are basically, I suppose, fed up with the increase in the burden of regulation. This is potentially the last straw with the additional COVID restrictions, the level of PPE required. So there is still a supply of practices. And as I said before, there's certainly a level of demand out there by the buyers that are in the market. So I think that figure is just, it's kind of a finger in the air. So really, I think the market finds its own value.
Okay. Do you want to pick up on Nigel's point before we go on to?
Sure. So what I wanted to say, I think Nigel is I suppose if it's the right time to invest in the, it's less about whether it's the right time to invest in the surgery or not. It's more about what does that extra surgery in reality mean. I think just putting it in the perspective of valuations and practice desirability. So I suppose the bigger the practice, the more buyers you have potentially, or it opens it up to a certain scope of buyers. So there are, and in each bracket, different practices suit different types of buyers. And I suppose for the market that we see the biggest amount of activity is that market of kind of 3 surgeries and up, 600 or 700,000 pound turnover and up, a mix of income. So I suppose if you are in the bracket in between the two, adding an extra surgery could potentially give you an additional string to your bow when it comes to exiting.
Yeah, and actually that's a very good point. And it's although it might not be Nigel's rationale in this, it certainly was my rationale in supporting him, because this development hopefully will take him up to sort of the $750,000 mark, where all of a sudden, as I say to my clients quite frequently that are interested in selling, it's a cruel world in terms of exit values. If you can grow your practice so that it gets to over the threshold of being of interest to corporates with a certain level of gross revenues and fees, then not only is the absolute value rise, but the multiple can rise as well, rather than having something that is smaller that can only be run by an owner manager. So I think that's something which is particularly important. Okay, well, there's another question that's come in from a bank manager. This is from Keith Reynolds of NatWest, and this was to do with the values of dental practices during COVID and a good time to seek expansion. So Keith, we've answered that by accident almost in sort of going through things. Thanks for asking that question. If I come now to back to Andy. Andy, one of the things that's been intriguing me is that there's been a lot of talk about certain types of practices that are doing surprisingly well during COVID. You must have some that fall outside of those categories. I'm thinking here that the two prime ones are NHS practices where the contracts continue to be paid, specialist practices where there's sort of been the demand for Zoom teeth or whatever. But what about those private practices with low capitation amounts? From your experience, how are they doing?
Well, I think we've got a few of those as joint clients anyway, but I think it's become a curve. So when we first went into lockdown, the people who were largely fee per item were panicking, and it was, well, I need a cash flow. How long is it going to be before I run out of cash? My fee per item has obviously disappeared overnight. And they found the early part of that period a loss-making period, obviously. Because of course you've still got some costs going through that you can't avoid, some costs that you've got going through, even when you're closed. But interestingly, certainly as we've rolled those practices forward, they seem to have bounced back. Certainly the ones we've been looking at seem to have bounced back quite strongly. And I think the reason that we've been given is certainly that I think particularly some of the NHS practices are not at full throttle. And therefore patients who've not been able to get an appointment with their own dentist have gone privately. They said that obviously they've had work that was unfinished from when they went into lockdown. So they've picked up lots and lots of new patients. I mean, some clients have doubled the normal number of new patients that they've been getting, and that's been month after month after month. They've said that potentially in that lockdown period, people had been looking at themselves on Zoom, that they decided that potentially they've got some money that they've not been able to spend, they can't go on holiday, and they've spent that in terms of potentially with a dental practice. So certainly from our point of view, we've seen very few, apart from that initial period where they were in complete lockdown, they seem to have come back okay. So it was really an early J curve that they went down, and they've come back up it quite successfully. That's
reassuring. That's good. And I suppose that's been our experience as well. But it's good that that's been yours. But move on to Malcolm. There's a question that's come in, a live question coming in. Our lender is still looking for 3 months at 100% of monthly income prior to the release of funds. An anonymous attendee.
No, is the answer. No, I mean we look to see what the performance of the practice is, and if it's at the point where we can support the proposal, then we will. But it doesn't need to be 100% for 3 months.
Yeah, that's good, and that's what I hoped and expected you would say. It's probably also, whilst we're talking about sort of COVID differences, In terms of information, though, I think it's fair to say that there's a greater information, up-to-date information requirement. Can you explain a little bit about that?
What in terms of information that we want for banks?
Yeah, what I'm coming to here is that prior to COVID, usually there would be historical accounts. There might be some sort of viability forecast, but under COVID, my understanding is that most lenders want to see some up-to-date management accounts, for want of a better description, which wasn't required before, but clearly we're in a different world now.
Yeah.
So that is the situation.
Yeah.
Okay.
Yeah, I mean, it goes back to what Andy was saying about how practices have recovered. In days gone by, it was a practice to change a lot, but clearly COVID changed all that. So we're looking for some sort of reassurance as a bank, and the dentist himself is looking for the reassurance that the practice is performing at a level to how it was advertised. Usually the income, they give you details of the costs, and ideally, ultimately, the bottom line that's going to service the borrowing. So yes, I think management accounts are key at the minute for all parties, not just the bank. Yeah. Yes,
no, I get that. Okay, thanks for that. John, again, things that have changed during COVID, there's been talk about different arrangements, different types of approaches to legal due diligence, perhaps financial due diligence as well, and also these weird retentions. There's been a question about that. Can you explain, give a background to what all that's about?
Yeah, I mean, it's been the case for some years now that if somebody was selling to a corporate, typically the deal would be structured on the basis of 65, 70 or 75% of the sale price on completion, and then the balance over a number of years depending on the performance of the financial performance of the practice. And obviously, given the current uncertainty, we are advising buyers that it may be prudent to look for some sort of similar structure if they're looking to buy a practice now. So what's happening now with all buyers is only the situation that's occurred if people were selling to corporates for quite some time. I still think at the end of the day, it's a commercial decision for, if a seller wants to sell on those terms and a buyer wants to buy on those terms. At the end of the day, the sellers have the risk of running the practice up to the date of completion, and the buyer will have the risk of running the practice after completion. I think that probably the tide is beginning to turn somewhat, in that, particularly having regard to what Andy was saying, and this is the same information that we're getting from our clients, that a lot of practices, no matter what the makeup of the practice, are returning to something like pre-lockdown levels of turnover. So from that point of view, it becomes increasingly difficult for a buyer to maintain that there should be a retention from the purchase price on completion. There are other retentions, not just for the general performance of the practice, but in particular, I suppose, retentions relating to the NHS. We have a client who's selling to a corporate at the moment, and their solicitors are trying to persuade us that there should be a retention and then some sort of division of monies received from the NHS on a time basis. And we're rejecting that out of hand and saying there's no reason from our perspective why the situation which existed pre-lockdown should be exactly the same now, which is that if there is any underperformance before completion, then that's down to the seller. After they've sold, it's the buyer's risk, and it's for them to run the practice and ensure that there's no underperformance post-completion. So I think when the market started up again, so to speak, in July, things were obviously somewhat more uncertain. But I think as time is going on, and certainly I would expect over the next couple of months for things to be returning more to the situation that we had before the first lockdown.
Okay, thanks, John. There's a question here which you might be able to answer. I'm not really sure because it's a one which could be a lawyer, could be an accountant. Although I haven't had any clients that have fallen foul from this. It's again from an anonymous attendee saying, I'm a dentist in a corporate, and I'm concerned about my deferred payments. So presumably this is somebody who sold the practice to a corporate. I know some groups are addressing the problem, but mine I've heard nothing. What does the panel think? So the issue here is that somebody sold, is waiting for a deferred payment and is worried that they're not going to get it. Is that something that you've come across?
Well, yeah, I mean, obviously we've had any number of clients who've sold over the past couple of years, whereas I say the deferred consideration was typically paid over 3 or sometimes 4 years. So there's a lot of our clients who sold their practices who are still waiting for part of the purchase price. The difficulty is that the sale agreement stipulates in black and white that if you don't hit a certain amount of turnover, then there's X amount going to come off the purchase price. And the fact that the reasons for the turnover decreasing are quite frankly irrelevant. We do know that there are some corporates who have appreciated that this is that this was the situation, and are effectively saying, okay, well then we will restart the clock from when practice is reopened, or from October, when things when the normal levels of turnover are returning. But in return for that, if effectively we're forgetting the last 6, 7, 8 months, what's happened over the last 6, 7 or 8 months, we are then going to require you to remain at the practice, because typically a seller will be tied in it to as an associate for the deferred period. And they're saying, well, if you want us to restart the clock, then you are going to have to remain with the practice longer than was originally anticipated. But the strict legal position is if the turnover is not there, then they don't have to pay.
Nigel?
Once this all blows over, John, and hopefully we are back to normal again, do you think that you will write in pandemic clauses into sale and purchase agreements?
I suppose it's not a question of whether we would write them in, it's a question of whether a corporate buyer would be willing to accept those kind of clauses. The problem is that, said the cleverest man in the world can't tell us what's going to happen tomorrow. And we have we've had one pandemic which we're in the middle of, which has had a certain effect, God forbid, but if there was another, it could have a completely different effect. And then what do you do in that situation? So I think it's always, I have been slightly altering some associate agreements by sticking the word pandemic in where it may not have been in before. But as I say, I think at the end of the day, it's a commercial decision for people to make, and it's there's always going to be a risk. Hopefully this is a once in a lifetime situation, but it'll be a matter for negotiation between the parties during the course of the sale, I would say. Undoubtedly some will try, for sure.
Anybody else got any knowledge on what other corporates are doing, Maja? Do you know what Portman are doing?
Well, I know that some of the new deals that are being agreed, that kind of there is additional time being set aside after the contract ends to kind of compensate for the pandemic. So some extra months being agreed and things like that. But I think it's quite I think it's a challenge on both sides for the person who is obviously tied in and the corporates, because they effectively haven't been able to operate in the same way that they've had the challenges that practices have had, single practices have had, but on a I suppose wider scale. So I think there is usually willingness to compromise, because ultimately, you know, the success of practices, success of a corporate depends on, I suppose, the happiness of the dentists that are within that corporate, in terms of being the ability to recruit in the future and ability to buy and add to the corporate in the future, and in terms of reputation. So I think majority are willing to find a compromise.
Okay, thanks. John?
Yeah, just there's one thing that we have had a number of clients who come to us where they've sold to the corporate and they've reached an agreement, and the corporate or their lawyers are then issuing documentation, variations to the sale agreement, variations to associate contracts. And the one thing I would say is that if anyone is in that situation, it's equally important to have those documents scrutinised by a lawyer who knows what they're talking about. Otherwise, they could end up, you know, quite frankly, in a far worse situation than they were to begin with. So, you know, don't just sign on the dotted line, but get some legal advice if you're in that situation.
Thanks, John. On another matter, there seems to be quite a lot of confusion. Charles, I'm going to come to you in a moment now about tax payments, where there's confusion about the ability to not pay because the concession's been made. But I think it's fair to say there are some strings attached to that. Would you like to give a bit of an explanation there, Charles?
So these are presumably, Alan, those who may have taken advantage of the concession, which was one of the measures that the Chancellor announced early on, where your 31st July, typically your second payment on account for tax year 2019-20, that you would ordinarily have been required to pay on the 31st of July 2020, you were allowed to defer payment of that until 31st of January next year, 2021. And in so doing, HMRC wasn't going to charge you any interest or late payment charges by deferring the amount. So at the moment, or when that was announced, then as long as that deferred payment on account was settled on the 31st January 2021, then you could settle it at that point and you wouldn't incur any charges. But there's actually a further concession that's come in, which may or may not be useful to at least some practitioners who might be looking ahead and thinking, oh my goodness me, I've got my deferred July payment to pay in January, and I've also got my normal payment for the following year to pay in January. And the latest concession is that if you get to 31st January 2021 and you do not owe HMRC in total more than £30,000, so £30,000 is the threshold. I'll explain how maybe that £30,000 could be made up in a minute. But if you don't owe more than £30,000 at 31st January, then there is going to be a facility where you can make an online request. So you can actually go online through your HMRC Gateway account. You don't actually have to pick up the phone or spend half an hour waiting for HMRC to answer the telephone, but to speak to anybody. And you can actually apply to spread that, let's say it is £30,000, over the following 12 months. And you can actually determine how much you pay each month over that 12-month period. So the first 2 or 3 months you could pay a small amount, and then you could pay a larger amount after that. You will suffer interest, but at least it's a way of perhaps helping with the helping with the cash flow. As to how that 30,000 might be constituted, that £30,000 would be a total of all your various payments that you might be due. So one option, let's say you got to 31st January, let's say you had £20,000 that you should have paid on 31st July, and you had another 20,000 to pay as your first payment on account for tax year 2021. And it seems to me that as long as you paid £10,000 on or before 31st January 2021, you'd be down to your £30,000 threshold, and you could actually then apply to spread that 30,000 over the following 12 months. And one other thing I'll just put in, I don't know if Andy's been looking at it with any of his clients, or he may find that the way the curve is described hasn't applied. But certainly with some dental practices, possibly who've been hit in the current year, do also consider whether you might actually be able to make a claim to reduce your payment on account for 2021, because normally your payments on account are based on the previous year's liability. But if in fact you were able to work out that in your current year, your profits were significantly down for the current year 2021 on what they were for 1920, then you can probably justify making a claim to reduce your January payment for 2021 as part of when you're filing your tax return. And that in itself might help you get down to near the £30,000 figure. If, having said all that, you're actually owing more than 30,000, then the revenue are still offering what they might call the normal time to pay arrangement, but that will involve you and almost certainly you rather than your accountant having to engage directly with HMRC and explain to them your particular circumstances, and it's probably more of an arduous process, and you might be asked for various other financial information as to you know why you can't pay the amount quicker.
Okay, thanks very much, Charles. And I can echo that last point that I often get clients asking me, you know, will I make representations on their behalf? But this is where HMRC like to see you grovelling personally. So there we are.
Well, I think that's the beauty, if I may just say so. That's when I say the beauty, that's the advantage of this £30,000 one, because that is almost you know, the way it's presented in the press release is it is literally you can go online. And because the figure is less than 30,000, sorry, I need to stress that you mustn't owe HMRC anything else. So if you're an employer and this is your own tax, you want to make sure that you're up to date with your pay as you earn and your NI on your employees. Otherwise, again, HMRC won't let you go through this process.
Thanks, Charles. Maja, I'm going to come on to you in a moment because we've had a question generally asking about recruitment, but before I do that, just a couple of other points that in the Q&A box, somebody's asked about a sale where Lloyds are involved and private fees. I think probably Malcolm's given an explanation as to how the bank's policy is working. I think if it's an anonymous attendee, if you'd like some help with that, then please email me and I'll speak to Malcolm after this. And also to the anonymous attendee who asked about the question about entrepreneurs relief, I think you must have missed Charles giving a detailed explanation earlier on, but this webinar is available to download, to watch afterwards. So there's a treat in store for you. You'll be able to download it and have a look at what Charles said, which answers your questions. So that's those 2 points that have been dealt with. But we had somebody asking us beforehand, Maja, about the general situation in dental recruitment. What's the view there?
So I suppose you can imagine at the start of the original lockdown or the first lockdown, the recruitment stopped across the board. So and in the last probably, as the practices, I suppose it mirrors what the activity within the practices, and we've seen an increase in the number of, private dentist positions being listed, which can in some way mirror the increase in activity, obviously in the private dental market. We've seen an increase in the numbers of candidates who are now available because there's been a number of roles lost. But certainly an improvement, and like with the growth of, I think we've lost somebody.
Yeah, no, John Grant, unfortunately, he told me beforehand he had an 8 o'clock session that he has to get involved with, so he's had to leave us early, Maja. Sorry to alarm you with that.
I was kind of thinking I'll be getting lost in the volume again. Yeah, so it's I suppose growth in private roles and also growth in that small group market. lots more roles coming up in kind of probably third of the roles that we list now are in that small groups market.
Okay, that's great. Thank you very much for that. Okay, I've got another one for you here. This is for all of us here because it needs our crystal ball. So the question's being asked is what do we all think that the market will look like for dental practice sales and purchases this time next year? Now, Maja, we've got to come to you first. You're the this is your sector.
So I suppose if we had a crystal ball, if you think about just dentistry in general, Nigel might be able to comment on this. But if you think about the fact that there's a large number of patients who have not seen the dentist this year, and those patients, the dental problems haven't gone away. So I suppose as the practices open up more, and as we see more patients visiting those practices, the activity will grow. So I have a feeling that there is pent-up demand that's being built up while we have a limited number of dental appointments available. So in reality, I think we will see an increase in that activity going forward. And everything else that comes with it, you know, I suppose the bigger the increase in the activity in the market, the more products are sold, the more practices are transacted. So I think there are better things to come next year.
Okay. Anybody else got any thoughts on that? Go on, Nigel.
Just picking up on what Maja said there, that I agree, and that's part of the reason behind building the extra surgery. But is there potentially going to be that private practices become more valuable for that reason? And ironically, NHS practices become less valuable because those patients that need more treatment aren't going to generate more UDAs. They're just going to need more work. And so UDAs, I feel, are going to be much harder to come by because those patients that we used to see every 6 months that needed the odd little filling doing, maybe need 2 or 3 fillings, and those patients who we're seeing on 3 monthly basis that needed 2 or 3 fillings, they then need 8 or 9 fillings, and that's all done on one course of treatment. Unless the NHS are really understanding with what they do with regards to the UDA system, or that UDAs don't come back and they pay us under a different remuneration scheme, I think that there'll be a massive problem with NHS clawback in the next year or so if we keep under the current arrangements.
There's a worry for you, Malcolm, because they'll all want to come to you to lend practices money to cover the shortfall. Now, we're almost at 8 o'clock, and I think I like to finish on time. It's good discipline. But there's a question that's popped in from Paul Austin, which is another one for you, Maja. What is the average multiplier of turnover for the valuation of a mainly NHS practice currently, please?
Depends on where it is. Depends on the size. You know, and it really depends on the size of the practice, and it depends on its location. So practices that are in central London or around in that kind of southeast area carry a premium. Practices that are maybe a bit further afield, a bit less. Larger practices carry more of a premium. So I'll have to be kind of sit on the fence and say it depends, really.
Tell you what we'll do, Paul. Send me a copy of your accounts and where you are, and then I'll arrange for you to get a more bespoke answer. Okay. Well, thank you, everybody. I really appreciate the panelists giving up their time to come and join in on this. I hope the audience has received some benefit from this. We've had a good turnout tonight. We've done our best to answer the various questions. For those of you who are wondering what this strange apparition on my top lip is, it's my feeble attempt at a mustache. I'm taking part in Movember. If you'd like to sponsor me, then why not? Just Google Movember Alan Suggett. It'll take you through to me, I'm sure. And you know, save me £5, whatever it is, will be very much appreciated. And I hope that we can see you all next week. Tell your friends about how wonderful this was. If you didn't think it was wonderful, don't say anything at all. Until next time, thank you very much, everybody. Bye-bye.
Thanks.